I'm Alan Kenny, Editorial Director with REIT.com, and I'm in Chicago for REITWeek 2013, NAREIT's Investor Forum. Joining me is Marty Cicco, Senior Managing Director with Evercore Partners. So, Marty, one of the more interesting pieces of news, at least that I've heard in the last couple months, was about the Empire State Building going public. Do you think that there'll be more of these kinds of iconic properties that go that route?
Well, Alan, it'll be interesting. Obviously, the Empire State Building is certainly iconic, and they're in the queue. I'm not sure that the iconic part of the real estate aspect of it will drive more companies trying to get to the public marketplace. Obviously, the sell-off of 12% in the last 2 or 3 weeks may discourage some people that were actually contemplating it. My personal view is iconic real estate is held privately or in public and private hands, such as Boston Properties owning the General Motors building and just sold a half interest or 40% stake to both a Brazilian and a Chinese interest. So I think iconic real estate, will always have a place in the public market, but also will still have a very strong market holdings in a private form as well.
And are you seeing any signs of major deals percolating in the market right now?
Well, there's obviously in our side of the world, we'd like to see more activity, Alan. That's how we make our primary source of revenue. And you saw a transaction in the apartment sector last week. You've seen a lot of activity in the private REIT sector, that you have a number of companies that are being forced to list. And a couple of the existing companies have been quite acquisitive over the last few months, both on a friendly and a hostile basis. But I think in some other sectors, I think healthcare has some more consolidation left. And if one thing came out of the crisis, you did see for the first time in the history of the REIT sector a much more of a bifurcation between the winners and losers. So you do have some significant multiple spread or gap between the top tier companies and the lower tier companies. We think activity will pick up, but I'm not sure anything will hit the major category. I think each sector has its own ability to have some further consolidation.
And I want to talk about quantitative easing. The Federal Reserve's interest rate policy, how has that impacted REITs' cost of capital?
Well, we've seen it in the last 2 weeks, as I alluded to before. I would suggest that the last 2 weeks have been a knee-jerk reaction. I think, not just within the REIT sector, but the markets broadly are clearly anticipating that easing. We've lived in such a low interest rate environment. The whole issue is going to be, has the economy improved enough that the Fed backs off? And then two is, will that be a gradual increase in rates? Which we do believe that the Fed has the ability to take its foot off the pedal in a slow easing method. But it was, I think, a normal reaction that once that realization starts to be understood by the market, there are going to be some choppy and knee-jerk reactions. But obviously you've seen the pullback in the 10-year Treasury. But at 216 or so today, we're still in a very, very low interest rate environment. We'd like to see this market stabilize here. We do think it will stabilize reasonably shortly. But as interest rates increase, there will be some pressure on the REITs. But we think the initial reaction has been a bit of an overreaction.
All right, well, thank you so much for your time, Marty.
Alan, it's always a pleasure. Thank you.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.